I find it truly baffling that the real estate industry on an individual broker level does not understand that they need to become the digital mayor of their town.
Yeah.
Part of that includes disseminating information and relaying it to the community in a convincing way, an honest and authentic way with integrity, and to rest them at ease. Not lying, truth, and what you think about it, and positioning yourself as an expert, right? If Gary Vaynerchuk is telling you to do it, if he's saying get out there and be vocal, David Childers is telling you to do it, I would suggest doing it.
If the only times that I call you are times when I ask you, who do you know that wants to buy or sell, would you really believe that I have your best interest at heart? Probably not. And so no matter what story I'm telling, you're not believing it. And then I always leave this one for last. This is authenticity.
Hey, everybody, welcome back. It's been a while since David Childers and I had this conversation. I say a while, I think maybe a month and a half.
Yeah.
But we're used to doing this every 2 weeks where we come in and I get to just sit here and smile and wave and introduce David. And he does all the hard work telling us about what's going on in the real estate world with, sales and expectations and interest rates. And we got a wild world out there, but I think a lot of people are just sitting around by the sidelines right now watching because, boy, we've been spoiled for several years and now the chickens are coming home to roost.
Yep.
But David, what's happening, man? I haven't seen you for some time. How are you?
I know it's been a while, Johnny. I think I had a commitment. We kind of missed a few Fridays, but good to be back together. And you're absolutely right. We're in a different position today than where we were, a month ago, or even 2 weeks ago, or as sort of the Fed is responding to inflation. I would argue this is all about inflation. This is all about the last couple of years. Probably one of the biggest dangers, to us all in the business is we got too used to the last 2 years.
We get spoiled.
Real estate, but we are seeing definitely a different market. So we'll talk about that today. But excited to be back.
Yeah, right. We can start to, when you haven't talked to somebody in a couple of weeks, you can start to say, hey, last time I saw you, interest rates were in the fives.
Right.
So what is going on out there in the big old world of the real estate and mortgage news and inflation? And you used a big word with me, inflection point of real estate. We're going to be talking about the inflection point of real estate today.
Yeah. So let's talk about that. I'm gonna bring the slides out here in just a second. And talk about the inflection point we're seeing in real estate. We're going to talk about prices. Johnny, if you want me to forecast interest rates, I'm not going to do it. Nobody knows. The forecasts that are out right now are, not even useful at this point. And listen, the journey that we've been on is all about inflation. I mentioned that a minute ago. The Fed came out however many months ago and said, hey, this is going to be transitory and we're going to move through this, not going to be around. And they kind of said, it's not. And then they also had that statement, this is how little we knew about inflation. And now we're fighting a fire right now. The one thing that's for sure in the economy is the Fed is responding. They're not leading. They're reacting to what's happening. And so all of that has caused a tremendous amount of economic uncertainty in the stock market, certainly the rollover into the mortgage business that we're seeing higher rates. I've seen stuff quoted in the last couple of days in the sevens on a 30-year fixed. And you're right, we started out the year at 3% and just went straight up this year. Mm-hmm. The average, cost on a mortgage right now is upwards of $1,000 more. You remember we had that conversation last year. Everybody's like, should we buy a house right now? Is now the right time? There's nobody that wouldn't go back 12 months from now and try to buy something at 2 3/4 or 3% interest rate. That is for sure.
Makes a big difference. I just had a friend that was buying a multifamily and VA, and he was, because of the rate change, no longer qualified for the property.
Totally.
Right.
Yeah.
And so now all of a sudden
situations right now, that could be week to week. You could
Yes.
qualify for something last week and not qualify for it this week.
That's real. And, I just want to point out, this isn't an American problem. This is a global problem, actually. There's all sorts of monetary issues and changes going on around the globe right now. And, I do have a certain level, might be small, but a certain level of faith that the fixers will fix things, right? They have to, in my opinion. But until we get there, people are always going to need a place to live. Investors are going to invest. I still don't think there's any indicators, and I'm sure we'll talk about that we're going to go spiraling out of control downwards. Maybe a price correction, of course, but I just don't feel as that downward pressure is coming. I haven't gotten 15 calls from all the disposition companies asking me to sign up for their platform for $7.99.
Right.
So I don't think it's coming just yet.
No. And so let me start to break down some of that. So let's start this first point. Here would be my goal for the next few minutes, is to give you, everybody watching, whether you're on Facebook, you're here on the webinar, give you ways to explain and visually show your clients what's happening in real estate right now. Okay. So let me break this down, and there's probably on the front end going to be some things that you go, hey, I knew that, but this maybe gives a visual way to show it. And then I'm going to give you, we're going to park kind of for the second half of this time, everything that I have on home prices. That's the number one question that we're getting here. Keeping Current Matters is what's going to happen with home prices. A lot of headlines, a lot of folks saying, here's what we see. We see depreciation. So I'm going to give you all of that. And we're starting to see folks say different things. And so I'll roll out that so that you can be the educator. I'm going to argue that what we're going to talk about today, if you'll use this, you'll be the most educated person on U.S. home prices in your area, no doubt. And that's my goal, so that you have that. So let's talk about this inflection point in real estate. Share my slides as always, Johnny. We'll start off here. Bottom line, again, I'm not telling you anything you don't already know. Active inventory in this country is increasing dramatically. So we started off the year just over 400,000 active listings. Ended up August. Pretty soon we'll have September here. The end of September, obviously today, and we'll get that number. But active inventory increasing dramatically. So if I'm sitting down with a buyer, I'm sitting down with a seller, I want to show them this. I want to say, okay, look, here's what's happening. Inventory is growing, and you certainly can grab that locally out of your MLS to say, here's what's happening. Use this graphic as, what's happening nationally. What at the same time is happening with demand? Hang on just a second. Let me see if I can get this. For some reason, it's not. All right, there we go. Can you see that, Johnny? We still with us?
I can.
All right, perfect. So what's happening at the same time? Inventory is increasing and demand is decreasing. Okay, so if you look at this, this is the showing time. You're gonna say, well, David, this is a couple months old. Agree 1,000% there, but demand is tapering off. And again, not telling you anything you don't know, but this is the inflection point we're seeing in real estate. Now, this gives you a way to show someone this is exactly what's happening, because here's what's very, very important. That slide that I just showed. The root issue of what always drives home prices is almost always supply and demand, right? It's going to drive price in any category, in any good or service, any product. It's going to be supply and demand. Now, Johnny, we've talked about this for the last couple of years. And what have we said? We have an undersupply of homes on the market and a ton of people that want to buy them through, the pandemic. So what's the inflection point? It's this right here. The supply and demand ratio in this country has changed very, very quickly over the last couple of months. If you take this bar graph and you think back during the pandemic, showings were through the roof and active listings dropped. So what do we see now? We see the inverse of that. Showings down just over 12% year over year, listings up almost 27% year over year. Complete switch to where we were back during the pandemic. Again, not something that anybody listens and goes, gosh, I didn't know that. I think we all are pretty familiar with that. Here's the point I'm making. Anytime I sit down with somebody right now, I want to explain to them exactly what's happening in real estate. And again, you can grab this locally. You can grab what demand looks like, what inventory looks like locally, build a slide. You can copy this slide if you want to say, okay, this is exactly what's happening where we're at. Why? Because that affects prices, that affects buyers, that affects sellers, everything that's happening. Oh, by the way, inventory, one quick slide before I pull these down. Inventory is still historically low. You know, if you look at year over year inventory compared to the same week last year, so, you know, as of the end of last week, we're 28.7% over last year, 1.9% over 2020, but 42% below 2019. So still a lack of listings compared to 2019 in the market right now. So not this flood of inventory hitting the market as we looked at on a historical basis. I'm going to pull these down for a second. Johnny, I think this is so important because what we're going to talk about in just a minute is pricing. Everything is built off of prices, and you know, helping people understand where pricing is going is our job right now. But this inflection point is, you know, what's happening in real estate across the country.
Mm-hmm. Yeah, and I mean, we're going to get that ebb and flow, right? And so you just saw, the other thing that I saw was inventory on the way up, showing requests on the way down. And I just think some people are putting the brakes on a little bit and saying, what's going on? I will say, though, in fairness, some of these numbers on showings or some of these numbers on closings, pendings, anything like that, in my experience, and I'm only speaking from my experience, have always experienced a lower August.
Yeah.
That, you know what I mean? It was like we'd go up and then we'd go down because people were on vacation and back to school. I've always experienced a slower August and September, but then October it built back up. So it'll be interesting to see where we end up in October. You know, again, I don't know if anybody, if you're watching this on YouTube, Facebook, or live on the Zoom, do you experience that same thing? September, maybe July, August, September, do you notice a decline at all? And then it reemerges for that second upward trend towards the end? Or is that just me?
Yeah, I think you're absolutely right. We see that seasonally in our business. The other thing I would say is we're seeing a reaction to higher interest rates, no doubt, just like we saw an overreaction to lower interest rates during the pandemic, right? Interest rates fall and everybody jumps in. Interest rates rise and there's that reaction that I don't know if I'm going to move forward, right? There's that, and the reality is it prices some people out of the market. There are people that are priced out of the market, and that is what it is. I don't wish that for folks. Affordability is challenged right now. You know, we use the Housing Affordability Index. No, I'll tell you, NAR has not released that. Yeah. I wish I had it to give it to you today, but it is pretty brutal on affordability right now.
So think about that, right? If you were approved for $400,000 houses and there was nothing to satisfy you at 400,000, or maybe not satisfied, but you weren't able to get in, now all of a sudden, what you're faced with is your 400,000 might be down to 320. And so you know, what your expectations are not going to be met. The positive side, I guess, out of this, and I always do try to find a positive spin out of this. You're going to see some people slow down a little bit, which is going to open up the door, I believe, for more VA type of loans or FHA type of loans to be accepted, where the seller is going to be a little bit more open to working with buyers, right? Working with buyers. So, and I know a personal situation that with that just came about. So they ended up accepting that VA offer. So, you know, interest rates don't matter when you're paying cash. So find some rich people.
Yeah. And listen, I want to be very clear, because I'm going to go over what experts are saying about prices here in just a minute. I don't see an Armageddon scenario. I don't see that right now. And I'm going to break that down and give that to you. There are folks calling for depreciation, and we'll talk through that. There are two questions I believe anybody that's thinking about buying a home right now, the best way to give them advice. What do you believe about interest rates? Where are they heading? What do you believe about home prices? Those two things. Okay, now certainly that's the financial aspect of buying a home, but that's critically important. Not to mention all the other things. I can tell you this, over time, home ownership wins. over year, 2 years, 5 years, 10 years, 30 years, whatever the case may be, home ownership absolutely wins. And so I think we have to be champions for that. We have to be champions with this message. So let's talk about, this shift in supply and demand. We said that, prices are always going to be determined by that. What are experts saying about that right now? So let me give you a few slides with a few quotes on it. I think it's the best way to sum up where, folks are saying that this market is heading. I'll start right here with George Ratchew from Realtor.com. Not surprisingly, deals are not getting done, with sales of new and existing homes declining for over half a year. Given that demand is cooling due to high borrowing cost, higher interest rates, incomes falling behind inflation, and the still limited supply pipeline. We just talked about that. It's becoming increasingly clear that prices have to decline to restore market liquidity and balance. Okay, so we have George here from Realtor.com saying, all the things that we know there on the top: higher interest rates, inflation impacting people. His perspective, it's clear that prices have to decline to restore market liquidity. Let's keep on this journey and talk about this. Mark Fleming from First American. While the markets considered overvalued may need to adjust to the not so new reality of high mortgage rates, housing market fundamentals still support a moderation of annualized house prices rather than a sharp decline. Okay, so moderation here, not sharp decline. Next one, John Paulson, billionaire. We are not at risk of a collapse today in the financial system like we were before. It's true, housing may be a little frothy, so house prices may need to come down or they may plateau, but not to the extent it happened. Okay.
It just the factors that allowed it to happen don't exist.
Mm-hmm. But clearly, some folks saying, "Hey, we could see that." So I'm going to keep breaking this down. Gerald Fairweather from Redfin. Why aren't high mortgage rates pushing home prices down faster? Look up homes for sale in your neighborhood. You probably see overpriced high-end homes, tear down, zero reasonably priced starter homes. There would need to be more supply than demand for prices to decline. The reason I bring those quotes in, Johnny, is what we see experts saying right now is sort of this call for anywhere from a flat market to slightly depreciating, but not this crash or this drop, okay, coming out of the last 2 years. I think the word they used there was frothy or the frenzy in the market, but starting to see that show up in places where people go, you know what, the market that we've been in, we're coming out of that. Higher interest rates driven by inflation, we started off talking this, impacting it right now. Now, in just a minute, I want to pause for a second. I'm going to get into what forecasters are saying about next year prices, because we've got 2023 forecast in now, and we've got a couple of different studies that break that down that I think will help folks make a, sort of capture that and show it to people.
Yeah, it's interesting. And the truth of the matter is we don't know till we get there. Sure. Right? We don't know till we get there, but we can kind of have an idea and a benchmark. Nobody ever expected 2007 and 8 to happen, but it happened, right? And I don't think not too many people could have predicted it, and the people that did predict it weren't listened to, right? Yeah. And then all of a sudden one day, every broker that I know was working different jobs or doing different things or scrambling, trying to make pieces of it. I don't see that unless something major happens in our economic situation. Who knows what can happen, right? Who knows what can happen? The stuff that's happening overseas can directly impact us.
Yeah, I think what's very clear right now is we're starting to see those experts and people saying, hey, we're going to possibly see depreciation. I use the word possibly because not everybody's calling for that right now. And I want to break that down. But one thing I do know is the ones that do call for it and are the sort of the doomsdayers will get the most press. So what I want to bring to you is what everybody's saying, not just one side or the other in this market right now. So let's look at what forecasters are saying in the market right now. I'll give you this look at 2023 home prices. This is the first look we have at it. You see this anyway, Fannie Freddie, MBA, home price expectation survey, NAR, and then Ivy Zelman. Ivy Zelman's depreciation going into next year. Can you still hear me?
I can hear you. Yeah.
I don't know what happened there. So who gets all the press? Well, if you've seen that article that Fortune magazine's put out and others talking about Ivy Zelman's forecast, that gets all the press. If you average all of these, including the 4% there that she's called for, it looks like, you know, this average of about 2%, a little less than 2% right now that of appreciation that forecasters are calling for going into next year. And I would call that right now sort of the, you know, the best case scenario as we look into 2023. So my point there is we're seeing more attention towards those calling for depreciation versus appreciation.
Yeah.
What I want to break down now is the home price expectation survey. So every quarter, a home price expectation survey asks 93 economists and experts in housing, what do you think is going to happen over the next year? And then they actually take it out over the next several years in their forecast. Here's sort of a visual breakdown of the latest home price expectation survey, which came out this week, of what those experts are saying. The majority calling for appreciation in the next couple of years. And you see it sort of aligned with what we just saw, you know, somewhere between 1 to 3%, 3 to 5%. And then you have those in the red calling for depreciation there, anywhere from, you know, less than 1%, 1 to 3%, 3 to 5%, but a smaller subset of those experts. But they're definitely out there, you know, 2 calling for you know, appreciation greater than 10% out of all those that are surveyed there. So nobody, you don't see this disposition or this lean towards we're going to see, you know, 10% or greater, or this, you know, 2008 type of scenario in home prices. You know, if you break this down even further, you know, 3/4 almost of those experts are calling for appreciation next year. Now, we've talked extensively about this, Johnny, the, you know, imbalance of supply in this country, the number of homes that need to be built, and millennials, you know, getting out there wanting to buy homes. Now, certainly affordability, we talked about that is challenged right now. And we've seen a massive shift in that due to higher interest rates, but still the overwhelming majority of experts saying, hey, we're going to see appreciation going into next year. Now, I would tell you, I'm sort of flat-footed on this, being cautiously optimistic. I think we're heading into a flatter market. I've been saying that in what we see in the next couple of years, but they even forecasted out further. And this is what that looks like going through 2024, 2025, 2026 from the home price expectation survey. You know, you see less forecasters calling for depreciation as we go throughout the next several years. So no doubt over the next few months, as they fight inflation, as the Fed does this to try to rein in inflation, we'll see where that goes. But this is all about that in the markets right now, the uncertainty of what is it going to take to tame inflation in this country. I want to cover one other study here. Zillow just released this. This is their MSA look at appreciation and depreciation going into next year. 618 MSAs, they are forecasting appreciation, 257 depreciation, the majority of those 1%, 1 to 3%, not this extreme amount of depreciation. So stop sharing here for a minute. If folks want these slides, they always can email me and grab them. But here's my point in this. We're starting to see the depreciation show up in forecast, but not to the extent that is a crash in real estate. Mm-hmm. Listen, if you bought a home last year and it gained 20% and it were to, and I hope it doesn't happen to anyone, were to lose 1%, 3%, or 5%, you're still positive, right? Either you bought it right or you bought it with a great interest rate. You know, that is definitely true. So I think as folks that maybe we sold a house to in the last year, reaching out to them and reassuring them and helping them understand that how good of a position they're in, probably with a lower interest rate, but even pricing we can help them with that as well. But that's the best look we have it right now at prices. This is certainly evolving as we come back, and you and I do this each Friday, Johnny. I'll bring those forecasts as they're updated, but that's the most up-to-date information we have.
Yeah, and you know what? It's not, again, it's not horrible, right? People are always going to need a place to live.
Yep.
And there's some people that interest rate isn't even going to be mentioned to. Now that's a smaller group, but the market doesn't look like it's going to crash out. So I would be reassuring people that the market is still strong. I'd be using these. And I mean, we're still at historic above almost everything or below everything where we need to be, right?
Right.
So it'll be interesting to see how it plays out. This is going to be a long winter, no doubt, but don't give up. Keep getting out there, keep getting signs in the ground. You might just have to be a little bit more, I'll use the word honest with pricing, right? Really don't push the envelope, reel the envelope back in. And I think part of our job, our responsibility as stewards of the economy, which we really are, we play a vital role in the economy. Real estate is one of the biggest factors, is to be as honest as we can in that pricing and not quote unquote buy listings, and set the right expectation that, hey, listen, I know that a couple months ago, I just went through this with a friend of mine. A couple months ago, he probably could have sold his place at 634, right? And I mean, well, that's what Zillow told him. So that's what he told me. When I got done my research, I'm like, man, 589 at best, bud.
Yeah.
And so, his expectation now just took a, $50,000-$60,000 swing. But I think it's our job to rest assure people that the market's not crashing. There's still people out there buying. There's just more inventory. So we're going to have to be a little bit more creative. No cell phone pictures from your car. Right. Good marketing, and let the people bid up, but you might have to come, what you don't want to do, and my advice to real estate agents right now about being this as honest as you can in price. And I'm not saying that there's deceptive practice. I mean, honest as in really sharpening the pencil, really getting in to do your research. But what you don't want to do is chase the market down. If the market does start slipping, you don't want to be on the top chasing it down. You want to hit the market where the market is. If you can be where the market truly is, then you'll stand a chance of getting that home sold in a normal time frame. I mean, the average days on market isn't 12, right?
Right.
The average days on market. And I would suggest that you all do if you all should do this once a month at your own locations anyways, do an absorption rate. How much inventory is truly on the market, right? Do you guys have anything for that, David, or a blog about that, or they can just Google to find out how to do it, right?
Yeah, I mean, absolutely. I have to go back and look and see if a blog on that, but we can say absorption rate is, ultimately inventory measured by months on the market. It's the number of sales in a month divided by the active number of listings, and that's going to give you absorption rate. What do we know about the last couple of years is, the velocity of the market has been very, very quick. We've sold a ton of homes and they've moved through. But I want to go back to a point you made. Being able to communicate what's happening in real estate is why I started off with the inventory and demand piece, because I think we have to educate buyers and sellers on that, certainly sellers, about what's happening right now.
Mm-hmm. I do think so as well. One of the ways that you can do that is with Keeping Current Matters and using the slides that you guys provide and using your state association or your local association information. We say it every single show. And you know what? Every day that I'm sitting there mindlessly scrolling through TikTok to, avoid reality, I see David Childers popping up, and I see other people from Keeping Current Matters popping up with that information. And David, we're on Zoom right now. Anybody can do it on Zoom. Anybody can do it on their computers, right? There's really multiple different ways to be able to come up with this, and it creates good blogs. It creates good content. We're going to be coming into a market, I think, here soon that the amateurs will be thinned out. And I don't mean that disrespectfully towards anybody. Gary Keller said it back in 2016 that the future is mega teams. I think it was 2016, maybe it was 2012, somewhere around there. But he did say at one point, mega teams are the future. It's going to become so expensive and so difficult to compete as an individual, right? So the way to combat that as an individual is to be more knowledgeable and more visible than anybody else. And you can do that with the data that exists from Keeping Current Matters, from your local association and your local market data.
Yep. Yeah.
Right.
And
video,
take
man.
some of these slides that we talk about and replicate them for your own inventory scenario. Go back and pull that and be that expert. Be the one that brings the information that's needed.
Yeah. What else you got? You got anything else good?
That's what I got. That is pricing, I think, is the number one question we get right now. What's happening with pricing? This is an evolving piece here. We're going to continue to update you and bring those as we do these, Johnny. But no doubt seeing a shift in what experts are saying about pricing.
Good. Well, that's what it is, man. So listen, thank you for bringing this information. If somebody wants to get those slides, how do they get them?
Sure. You can start a free trial. Go to trykcm.com and start a free trial. KCM, you can email me always, David at Keeping Current Matters. Be happy to send those to you if you want to use these. So.
And that's 14 days, right? You get 14 days free trial.
Yep.
So listen, guys, go in there, make 3 videos a day. At the end of 14 days, it's 28. That's 43 videos or something, right? There you go. You got all the information for the next year, right?
I think, listen, I think our job right now, Johnny, is to be vocal and, and to make videos and get information out there, because if we're not, somebody else will. And it's the media, and they're not telling the, the full story of this market.
I'm going to read something to you. You give me a second.
Okay.
Give me 1 second. I'm going to get to it. It's on my own website, and you would think that I would remember this, right? But I can remember it paraphrased, but I want to read it exact.
See that, Christine? Thank you for that.
So there's this guy out there that does some YouTube videos, and he does a couple Facebook videos, I think Instagram and stuff like that. You might have heard of him. He's not really that famous. His name's Gary Vaynerchuk. And he said this in 2016 at Inman, 2016, so 6 years ago, right? At this point, I find it truly baffling that the real estate industry on an individual broker level does not understand that they need to become the digital mayor of their town.
Yeah.
Part of that includes disseminating information and relaying it to the community in a convincing way, an honest and authentic way with integrity, and to rest them at ease, not lying, truth, and what you think about it, and positioning yourself as an expert, right? If Gary Vaynerchuk is telling you to do it, if he's saying, get out there and be vocal, David Childers is telling you to do it, I would suggest doing it. I would suggest doing it. And here's another thing that we don't talk about in here, because this is for Keeping Current Matters, but Cisco predicted in 2016 that 79% of the data delivered to your phone is going to be video or streaming video of some sort. And I think it's 84% across the internet globally. So how are you getting your message to your consumer? Right?
Yeah,
think about it.
Absolutely.
Become micro-targeted, become that digital mayor, and put out good content talking about the market using this information. And listen, all the hard work's done. They've already done the hard work. You just got to look pretty. Anyways, go to trykcm.com, start your 14-day free trial. We'll see you back here in a couple of weeks, and it's going to be mid-October.
Yeah.
Bring your costumes.
Crazy.
We'll see you then. David, thank you.
Johnny, take care.